Over to the markets now. The local market closed in the negative today. Local stocks were largely mixed. The rand spent most of the day above 17 Rand 50 against the US dollar, which continues to strengthen. Before we look at the indicators, let's chat to market analyst Martin Smith. Thank you so much for your time, Martin. We do appreciate it. So global markets are down again today, and I suppose investors continue to brace themselves for a huge interest rate hike in the US next week.
Yeah, absolutely. I think markets are still trying to digest that number that came out of the US on Tuesday, and obviously the sell-off that we saw following that. So still trying to find a little bit of direction. I think we'll be a little bit kind of range bound, and I think very dependent on what data comes out over the next few weeks and or months. So it's difficult to kind of see where things end and where they start, and I think that seesaw volatility and seesaw risk appetite will continue over the next few weeks. Again, data dependent. Certainly.
I guess we'll just have to wait for the next few weeks to see what happens. But let's move over to another issue. Now, FirstRand released its results. It's seen the biggest dividends in its history, and it seems as though the CEO is somewhat upbeat about economic recovery.
Yeah, absolutely. It was an incredibly strong set of results, or result from FirstRand, should I say. Look, we did have that trading statement last week, so we're kind of a little prepared for what came through. But across all three divisions did very well. We also need to remember that this is in a very clean base insofar as from a COVID perspective, this is kind of June 2021 and June 2022. So it's quite nice that they've done well in a kind of post-COVID world. And obviously the special dividend also came through, which is very positive as well. So shareholders liking it. It's a core holding in our portfolios. Very good kind of capital allocator, very good capital returns from the business. So very happy to be holding the share.
Okay, let's move over to City Lodge, also releasing a market update today. Does it tell us anything about a possible recovery in tourism and leisure, given how that sector was also decimated by the COVID-19 pandemic?
No, I think there is definitely a correlation. I think it's a perfect correlation between the recovery of tourism and the kind of occupancy rates we see at a City Lodge, because there are a few other nuances. Insofar as the kind of trading statement that we got from them, not a massive amount of detail. The recovery is definitely ongoing, and they are starting to kind of improve from those losses that we saw throughout the COVID period. I think occupancy rates still need to improve quite a bit more for them to be properly profitable. So again, I'm happy to be sitting on the sidelines with this one. I think it's still a little way to go, and there's still a few things that need to kind of play out. And I think there are other places to be, both within the sector itself and kind of across the JSE.
Okay, and then Martin, maybe just tell us what's your take on the rand. I always say this, and people always laugh at me, but the rand is very moody. So what is your take on how the rand has been performing?
No, I mean, I always say this, but the rand moves on average about 2 Rand 50 versus the dollar in any given year. So that kind of talks to your point about it being moody. So, I mean, we've obviously seen quite a sharp sell-off subsequent to the CPI print that came out on Tuesday. We were seeing a little bit of dollar weakness starting to creep in, but then pretty much bulletproof from Tuesday onwards. 17.50 at the moment. I think it could even push out as far as 17.80 with fears around US recession starting to creep in. You've obviously got the Fed speaking next week. 75 basis points was penciled in, but it might even be 1% that they'll push interest rates next week. So I think we could see the rand weaken from here, unfortunately.
Okay, well, we'll definitely be checking in with you next week sometime as well. Thank you so much. That is market analyst Martin Smith.